Hello everyone, welcome to another episode of Ask NDB Wealth mid-month market update for the month of January. I am Harini Vijayaratnam and with me I have my colleague Kavin Abhesekara who will start off today's discussion with fixed income.
Thank you, Harini. During the first 2 weeks of 2024, the 3 and 6 month Treasury bill yields experienced a persistent downward trend, falling by 24 basis points and 7 basis points compared to the last auction in 2023, recording 14.27% and 14.09%. However, the benchmark 1-year Treasury bill weighted average yield remained the same at 12.93%. The central bank successfully raised the full amount on offer in this week's auction, but was unable to raise the full amount in the previous week's auction. Furthermore, there was a Treasury bond auction held in the second week of 2024 with the central bank raising 125 million rupees through the maturities of 1st February 2026, 15 March 2028 and 15 May 2030, which recorded weighted average yields of 13.83%, 14.21%, and 14.22% respectively. However, the central bank was unable to raise the full amount on offer in the Treasury bond auction. Private sector credit growth for November experienced a negative 3.1% year-on-year decline. However, in month-on-month terms, it consistently maintained positive trend for the past 6 months. Moving to exchange, the Sri Lankan rupee appreciated by 0.38% against the US dollar in the first 2 weeks of 2024 compared to the last week of December 2023. The rupee showed strengthening signs following the funding from IMF, World Bank and the Asian Development Bank in December 2023, and the weakening US dollar further contributed to the strong rupee. The gross official reserves for December 2023 were at $4.4 billion. Tourist arrivals for the first 2 weeks of 2024 recorded 101,000 arrivals, which is a 114% gain compared to 47,000 arrivals in the first 2 weeks of 2023. Over to you, Harini, to start on fiscal.
Thank you, Kavin. According to the release by the Ministry of Finance, the government of Sri Lanka collected revenue amounting to 2.4 trillion rupees, a notable rise from 1.6 trillion rupees in the initial 9 months of 2023. The government spending saw a 23% rise, reaching 3.9 trillion rupees during the same period. Despite the increased spending, the overall deficit for the period decreased to 1.5 trillion rupees compared to 1.6 trillion rupees in 2022. However, while the official release not being published yet, the President's Office State Revenue Unit Director General indicated that the total revenue for 2023 had surpassed 3.0 trillion rupees, with tax revenue reaching 2.7 trillion rupees, and the government expenditure has increased to 5.3 trillion rupees, indicating the overall deficit for 2023 would be 2.1 trillion rupees, which is below the revised budget deficit of 2.4 trillion rupees. During the first 2 weeks of 2024, the equity market experienced a subdued performance, primarily attributed due to the uncertainty surrounding around the progress of external debt restructuring, particularly impacting the banking sector. As a result, the overall ASPI declined by 0.4% and S&P SL20 declined by 1.5% compared to end of December. The foreign investors continue to be net sellers during this period, and sales amounted to 512 million rupees. On a positive note, CSE has announced plans to introduce 3 new products in the first quarter of 2024, namely infrastructure bonds, perpetual bonds and sukuk bonds, which is expected to increase investor participation in the market. Thank you.
Thank you for joining with another episode of Ask NDB.